Most traders don't lose because they're not intelligent. They lose because they're unprepared. Yes, trading is hard, but not because it's complicated. It's because we are. Trading exposes your emotions. Before we go any further in the series, we need to discuss something a lot of people neglect. It's why the majority of traders fail and how you don't become one of them. Trading isn't gambling, but if you treat it like gambling, it'll pay you like gambling. Professionals treat trading like a business, beginners treat it like the lottery. The market doesn't reward excitement, it rewards discipline. The first reason most traders lose: they have no plan, no criteria, no rules. They open the charts and just start clicking buttons based on how they feel. This leads to random entries, overtrading, switching strategies, chasing candles. If you don't have rules, every trade becomes emotional, so no system equals random results. Overtrading kills a lot of accounts. Beginners think more trades equals more money. It's the literal opposite. Slowing down is faster progression and less is more. More trades usually just equals more mistakes, which leads to more losses. Professionals are selective. You may have heard the term A+ setup, but you should not be taking any other setup than an A+. Why would you risk your money in lower probability conditions? At the chance you're correct, you still lose. Beginners feel like they need to be in the market constantly, but sometimes the best trade is no trade. If you risk 20 to 30% of your account on a single trade, how many losses in a row do you think the account can hold up for? Survival in this game is step 1 and always will be. Risk management is a top priority. You can't grow an account you've already lost. Lose 50%, you need 100 just to get back to break even. And this is the big one. Fear, greed, revenge trading, FOMO, they all lead to tilt, which is the most destructive circumstance you'll face. Closing winners early and seeing price go to your target, moving stop loss prematurely, chasing breakout candles. The market doesn't hurt you, your reaction hurts you. This entire career is you versus you. There's no competition besides who you were yesterday. Most traders never give anything enough time to work. One losing week, they switch strategies. One losing trade, they start doubting everything. Consistency comes from mastering one edge, not chasing 10. So what separates the small group that actually succeeds? They treat trading like a skill. They follow rules, they protect capital, they focus on process, not profit. They don't try to get rich this week, they try to still be trading by next year. We're laying foundations first in order to support future growth, because tools plus structure plus discipline lead to consistency. I got into trading lightly about 4 years ago and jumped from stocks to options to futures, and I was trading the EMA strategies, testing out stochastic and Bollinger Bands, even trying the Ichimoku Cloud, which appears crazy looking back on it now. I was like most other traders and started out with a strategy, and the moment it doesn't work, look for something else. It wasn't until I locked in on what felt natural to me and stuck with it when I felt true progress and finally reached the stage of profitability. Over time, as you backtest and recognize patterns, you can increase the performance of your strategy by slightly optimizing it. Just remember, you will lose, and there's nothing that is 100%. You just need to trust your setup when you see it, execute it relentlessly, and discipline yourself so much that it feels out of character to break any of your rules. Become the trader you know you are in the future. If you avoid these common mistakes, you're already ahead of most traders. Although they're not your competition, it's always nice to be one step ahead and not have to worry about repeating mistakes others have made in the past. In the next lesson, we'll dive deeper into the actual tools and concepts that give you an edge in the market. I'll see you in phase 2.